This is Colin Cattell with Palisade Radio. On the line with us today is returning guest Jordan Roy Byrne, editor of thedailygold.com. Jordan, thanks for coming back on the program.
Hey, Colin, thanks for having me.
You know, I've said it before and I'll say it again. You have hands down some of the best historical and technical analysis of precious metal sector that's available today. You stay away from the voodoo of cycle theories and never cross over into the realm of conspiracy theories. And last time on the show, you called for the bottom in junior gold stocks, one of the first people to make such a call in the sector. Looks like you were correct at this point. With that being said, what is your analysis telling you today?
Well, today I think we're just in the larger picture. We're still in a recovery, and this is going to continue for the balance of the year. What's interesting in the very short term is looking at the stocks, and in particular, we can use the ETFs, SIL for the silver stocks, GDX and GDXJ for the gold stocks. The silver stocks are definitely kind of having a little bit of a short-term breakdown, so they're having a correction here. The ETF SIL, it closed at $13.60 today. I see support down just below 13, kind of above 12.50. So that could go another 5-7% or so. That's a place where we could see a short-term bottom. The silver stocks have been a lot stronger, so that's why they're having more of a little retrenchment here. Looking at GDXJ, that closed at 41, and both GDX and GDXJ for the last 13 or 14 trading days, they've been trading in this really tight range. Before the end of last week, I thought they were going to break out and move up aggressively, but we haven't seen that, and still they're just holding in this range, and I've kind of been waiting to see if they were going to break below this range and fill an open gap from early in February. So GDXJ closed just below 42 today. It has a gap down to 38, so it's possible that it could dip and fill that gap. If it doesn't, it's probably going to hang in this consolidation and break to the upside. So I guess, when are we going to have this next push higher with respect to the stocks? I think it's going to take more than a couple of days, but clearly we're in a short-term correction here, and I wouldn't describe it as anything other than that.
A recent article you published cautioned investors to not be scared of the recent move up in the precious metal stocks. You do not fear any type of a major pullback for some time due to your historical analysis of previous recoveries. How do you reach such a conclusion?
Well, I looked at 6 major bottoms going back to 1960 with respect to the gold stocks, and it's very interesting because after a major bottom, people are still scared. They're still it takes them a while to realize that a major bottom is in place, and even when you're only a few months after that point, say where we are now, the sentiment is still fearful. It's still kind of remembering the big losses of the bear market. And so people, when you see great gains like we've had, people get scared and they worry that there's going to be a big pullback or another retest of the low. And so I looked at these 6 instances, and the correction, it's really a function of how the market is recovering. Is it shooting straight up, or is it rising steadily? I mean, the corrections are a function of that. But in these 6 instances, it took the market a very long time to have more than a 21% correction. So, and when the market had a big correction, like a 17 or 20% correction, those came in after the 2008 bottom, when we all remember even the large stocks doubled, I think, in a month or two. So the biggest pullbacks were very short and swift. We had several 17% pullbacks there. I think the biggest was a 21% at some point in the middle of 2009. So the biggest pullbacks happened in that recovery. And the reason was, as I said, because the recovery was so huge, and big stocks recovered 75, 100% very fast. And then, of course, juniors recovered 200, 300% extremely fast. So that's why that happened. And kind of in the other recoveries, the initial corrections were not very big. I mean, 10% or 12%. And with respect to this recovery, and with respect to the large gold stocks, the HUI, for example, that's what I'm basing this on. It looks like that's something that we could expect because we've kind of had steady gains as far as this recovery, and you just don't see that big correction until um, maybe more than a year or an average of a year and a half after the major bottom, and that's when the market has appreciated substantially and it's really overbought and in need of a correction. And Colin, I think this is the case in various equity markets. I mean, look at the bottoms in the NASDAQ, 2002 to 2003 and 2000, and also after 2009. I think after 2009, the NASDAQ had about a 98% rally, and the biggest pullback I want to say was 14%. And the numbers are very similar coming out of the 2002 to 2003 bottom. So there's you have to look at the history, and that kind of gives you a guide of what to expect. So looking at that, that is why I believe we're not going to see any significant pullbacks this year unless we absolutely exploded higher over the next 6 months. If that happened, then you would see a larger pullback.
You just got back from PECK, which is the largest mining conference in the world. One of our regular guests on the program, Rick Rule, was quoted as saying that people are overly optimistic and that we can expect tough times to return this summer. Others were even calling for a few hundred venture companies to go out of business. I simply don't see that happening, and from what you just said, it looks like you don't see that happening. We're on the way up, and a rising tide seems to lift all boats. What were your takeaways from PECK?
My takeaway was just the sentiment. Everyone was cautiously optimistic. Nobody really wanted to be very optimistic or just point blank optimistic. And again, this is kind of what you see after major bottoms. You know, people get optimistic, but they're not. They're never. They're always cautiously optimistic or hopefully optimistic or mildly optimistic. So I'm not surprised at that sentiment. With respect to what Rick Rule is saying, I mean, obviously Rick Rule, he's forgotten more about resource investing than I know, so I would defer to him on a number of matters. But he may be speaking about the tiny juniors that are really cash strapped and really in a lot of trouble. So it's with, I mean, there's so many different types of companies in this sector and industry that some of us, when we're speaking about it, we really need to clarify what kinds of companies we're talking about. I mean, just to give you an example, if you interview someone in Canada about the juniors, they're talking about the CDNX, the venture exchange, and companies that trade at 20 or 30 cents. But if you talk to someone in the US about juniors, they're talking about GDXJ and companies that trade at 2, 3, 4, 5, $6. So I think that's what kind of creates some confusion. And so with kind of, like I said, the juniors that are cash strapped and really don't have anything and have little chance of just doing anything, the companies that are not going to be lifted by higher metals prices, they're going to fade away for sure. But I mean, the companies with money and good projects, they're recovering substantially. I mean, those stocks that have recovered strongly, I think they're going to continue to perform well. As I said, if something has gone from 30 cents to a dollar or 50 cents to $2 or $3, yeah, there is the risk that it could have a big pullback over the summer or maybe in the coming months. But overall, I mean, just if you look at the CDNX, that is a very, very bullish chart to me. I know it's not a perfect proxy for the junior mining sector because I know there's some tech companies in it and there's some oil companies in it and so forth. But that chart just looks really, really bullish to me. I mean, there is a clear bottom there. It had a great retest, I think, of the breakout in January. That thing just looks like I can't say enough. I mean, I can't say more. It's made a clear bottom to me and looks very bullish.
For people like ourselves and many of our listeners that are intimately involved in the precious metals sector, the gains thus far have seemed quite substantial. We're still months or possibly even a year away from any type of mainstream money recognizing these moves, and of course by this time, more than 30 or 40% of the move might be over. Can you touch on this?
Well, it's an interesting question. I think people have clearly noticed that we've had a little bump up here, but in their view, um, it seems that they think there could be another retest of the low or another leg down before we get a final bottom. Looking at, I think technical levels, and since gold is really the granddaddy of the sector, some like to say. The key for gold is going to be in the low 1400s. If you look at a weekly chart, I think there's resistance from 1400 to 1420. So I think when gold breaks above that, that is probably going to trigger some more mainstream money coming into the sector. And in the same vein, we can look at GDX and GDXJ. They have this clear resistance for GDX at 30, GDXJ in the low 50s. And when these ETFs break above those levels, I think it's going to be, you'd see a similar rush in as far as momentum money and hot money from the mainstream. But in addition to that, the stock market has continued to rise, which I'm a little surprised by. And we've talked about the negative divergence over the very long term. And I still think the stock market is going to peak at some point this year. And so when we see the stock market peak, then the mainstream cannot make money on conventional stocks. And that's when you're going to see more of that money start to come into commodities and resources. But my last point would be we've seen some outside money come in the sector. I mean, not mainstream money, but we've seen a little bit of private equity money start to come in. Maybe some money from generalist and value type funds. So I mean that sector right there is not really mainstream money, but we have seen a little bit of outside money come in. And to conclude what I said, I mean the key will probably be gold in the low 1400s. If we get that big breakout above 1400 on the weekly chart, that's when you'll start to see more mainstream attention.
And gold's been moving up nicely, but silver is trading in a very narrow range and has not broken out at all yet. What are you expecting for the metals, the gold and silver ratio moving forward?
Well, typically after a significant low, gold usually leads silver. Silver is slow to come out of bottoms. It's very interesting. If you look at the 2000 to 2001 bottom, the stocks bottomed in, I believe, November 2000, and silver didn't even bottom until about a year later, whereas gold bottomed in, it had a double bottom, I think, in February and April. So it is possible that silver can really lag gold for a while. I don't see silver continuing to lag. It obviously looks very weak right now, and it is lagging. My key level as far as silver, since gold is leading silver right now, I'm looking at 1350 to 1360 for gold. That's resistance, and it's been resistance over the last week or two, and that's kind of what's causing the sell-off here, or the weakness. If gold can break above 1350, 1360, it's going to be able to get to that target in the low 1400s. And I think if we get that breakout, then we're going to start to see silver perform better. But certainly over the next week or so, it looks like silver is going to continue to be weak. And as you get further into a move and deeper into a move and sentiment gets a little bit better and people want to take more risks, that's when you start to see silver really outperform gold. So I would say I don't see silver really catching fire until gold breaks above 1420, like we talked about earlier. But as far as the near term, if we do see gold finally break out above 1350 or 1360, then silver should start to perform a little bit better against gold.
Jordan, I'm a huge fan of your work. How can listeners gain further insight into your research and get on your newsletter list?
Well, they can go to thedailygold.com. I have a free newsletter and also a premium newsletter. I suggest they sign up for the free newsletter first. I send them 2 free reports, and I give some premium samples there, and you can get an idea of what my premium work is like.
Well, thanks so much for the time, and we'll have to get you back here soon for another update.
Thanks for having me, Colin.